So what does this deal say about Uber, Lucid, EVs, and more? Mark Fields, former president and CEO of Ford Motor Company, also CNBC contributor, joining us now. Mark, your take on this deal.
Well, it's a much bigger deal for Lucid than it is for Uber. And Brian, what you're seeing with Uber is they're spreading their bets, right? They've announced this partnership today where, Lucid's going to provide the cars, Uber's going to provide the ride-hailing network, and Nuro, the self-driving technology. But they also have, they've invested in, their approach, as you know, is they invest in third-party AV firms rather than develop the technology themselves, which they tried a number of years ago. But they already have partnerships with Waymo. They have partnerships with VW with their new bus. They have a partnership with Baidu for growth in Asia and the Middle East. The difference here, Brian, is they're forking over money to make investments in Uber and Nuro. So they must see something here that's important for them. But you also have got to believe there's a little bit of matchmaking going on here, right? Because Lucid is majority owned by the Saudi Arabia PIF fund, and they also have about a $5 billion stake in Uber. So it's an important deal for Uber. They're spreading their bets, but they're also investing. And for Lucid, it obviously is a very big deal, given that they only sold about 10,000 vehicles last year.
I love what you said. I mean, PIF, the big Saudi investment fund, maybe sort of promoting its own investments by I'm sure they had a hand in nudging this. But here's my take, though. And Lucid, the Gravity, beautiful car, starts, I think, at $95,000. My first take, Mark, was, aren't we supposed to get smaller and cheaper? This is a pretty expensive driverless taxi.
Well, Brian, you're exactly right. Here's the thing. Nobody's talking about what's the business case around this. How much
are they going to charge to make money on Kelly or I rolling around in the back of a $100,000 EV?
Exactly.
Well, it's not only just $100,000. That's for the car itself, the Gravity itself. Then you have to add the technology, the compute power, the LiDAR sensors, et cetera. So you're exactly right. The question is, with $20 rides, how many do you need to make money on this? And so, I think the risks here are obviously the high cost per unit. Secondly, is the ability for Nuro to scale. I mean, they've done about 1 million miles in deliveries. This is passenger transport, which is a different kettle of fish. You got competition, whether it's Waymo or some of the other ones that are coming out, and then the regulatory hurdles. But yeah, nobody's really talking about how you actually make money here.
Well, we are. That's the point of this segment. I mean, how do you do that? I can see it, a $25,000 car, like you said. You just drive this driverless car. Anytime you're not charging it, that car's on the road, picking up passengers, making money. Listen, Lucids, they're high end. These are luxury automobiles. I like the deal, the idea of it. It just seems like an expensive car to be doing this with, but maybe there's a market for that. TV news anchors and global kings.
Yeah, there is a market for it, but it's limited. But I think to your point, Brian, and your question, I think the other ways they're probably trying to figure out how they're going to make money is through advertising in the vehicle. That could be lucrative for them. Now, could it be to, overcome the high, cost per unit that these vehicles are going to have and the revenue they're going to generate for, the ride share? I think they're going to think, obviously advertising in the vehicles and maybe some other ways to kind of make this business case work for them.
So I'm curious, Mark, what you think this would mean for Tesla, for Waymo?
Well, I think what you're seeing here right now, Kelly, is it's a bit of a breakout moment for AVs. I mean, when you look at Waymo, you've seen what they've announced, over 250 million rides, things of that nature. They're pretty ubiquitous in cities like San Francisco. So, I think consumers are starting to get used to, autonomous EVs running around the cities. And, you're seeing all the competition now starting to kind of ratchet up efforts like, Tesla, they're started in Austin, they're expanding. You got Waymo, who's announced more expansions. You have this deal here. Who knows what's going to happen with a company called Zoox, which is owned by Amazon. So I do think you're hitting a bit of a pivotal moment here, a breakout moment for EVs. And again, the question is ultimately, what's the business case? Who owns these vehicles? And, how are you going to make a return on them?